If you are an 05 in the military retiring at 20 years, then this is the live session you need to be watching right now, because we're going to talk about the things you need to be worried about or focused on when it comes to your military pension, and specifically what's come to us the most about is what do I do about the survivor benefit plan, and if I decline it, what is the best option? Because what most folks are doing is not going to help them out. So there's two main problems that we'll discuss today at the end of this presentation, where I go through all the calculations. But the one problem is over 80% of retiring 05s are committing around $165,000 a year, or not a year, over 30 years when they fail to decline the survivor benefit plan. So it's significant numbers we're talking about. And then those who do opt out and get the standard kind of old school insurance policies, that really doesn't solve the problem, because even a 30-year term policy, if you're retiring at 42, which is the scenario we'll have today, there's a really low chance that that would come into play before you reach the end of that term. So those are the things we'll talk about in this presentation. We think you'll get a lot of answers quickly around this specific scenario. Obviously, if this isn't you exactly, you can extrapolate the various ranks and times in service. That'll be useful to you for your situation. But before we get into all that, I want to go over some of the announcements of things that we're working on, and give you a chance to sign up for some of the stuff that we're doing. And the big thing that we have going on right now is our new guide and online portal for all the information you need to make around what do I do, how do I maximize my military pension, how do I avoid the survivor benefit plan, what are the numbers that are relevant to me. Again, we'll go over those here shortly. But that's what this is all about. There's so much information out there. You're probably spending hours and hours every single night really trying to focus on, how do I network? How do I write resumes? And this subject comes up, and it's not really about you in the sense that, hey, your pension's about you, but the survivorship part of it technically isn't. You're focused on, hey, where do I get the income in? These maybe just in case scenarios are really always set up around fear, right? Oh, it might happen, so we should just go with the status quo just in case. And that might not be the best case scenario for you. And as most folks look at these numbers, that's where they get confused and wonder, hey, why isn't this more simple? And it's like, well, it's because we're looking at it the wrong way. When it comes to what is the value of something I'm receiving, and what is the cost I'm paying for that thing? Well, the cost that you spent to be able to earn your military pension is the 20 years of service. Everything you had to do to get to this point where you get to earn this pension. So logically, it makes sense that then we should look at this survivor benefit plan as a cost-benefit analysis, right? What's the cost for the benefits? Well, it's pretty straightforward. It's 6.5% for 55% of a benefit based on only one scenario. And so since it's only one scenario where there's technically a positive rate of return, and in that positive event, the positive rate of return only happens after a negative event. It's right there in the name, survivor benefit plan, right? So a survivor implies something has happened, and really in this case, in order for a payout from survivor benefit plan to happen, it means that the service member, the veteran, would pass away to trigger that. So there's only one potential scenario. So we'll also look at the probabilities of what that looks like for just depending on ages and actuarial data and stuff. And we're going to pull all this data directly from all the government websites. You don't need to go download new apps and stuff to figure out anything whiz-bang on, what are you going to get? It's pretty straightforward what you're going to get. The government rules are the rules, right? So now, just because they're the rules, does it mean you have to participate in all of them? Well, actually, no. It's not like active duty. This is post-military benefits, right? So you actually do have a lot more options. It just doesn't come up as much as all the other requirements you have going on at military retirement. So it's understandable you're not addressing this until you're now watching this video, possibly. So instead of looking at the cost and benefit, the more useful thing to look at is what is the probability of a positive return on investment? Because either you're spending your time or your money on a program like Survivor Benefit Plan to protect your pension. That's ultimately what this is about, whether it's life insurance or the Survivor Benefit Plan. It's about protecting the value of the pension. So we got to understand what is the value of the pension and what is the probability that I'll live a long time and receive most of that value versus something happens early and I need to make sure my spouse or family has a additional benefit as well. So real quick, let's go over how does the Survivor Benefit Plan work, and just the most important aspects of it that you need to know if you're just hearing about this kind of for the first time. Bottom line is it's automatic enrollment. Like, you've already had it while you're in active duty. Okay, you just weren't paying for it in any way. But it's once you are collecting your pension, if you don't opt out of it, again, you're automatically enrolled. If you don't opt out of it or decline it, then you're going to be committed to paying 6.5% of every monthly paycheck for 30 years. That's the program. And so if you intend to opt out of it but don't before your retirement date, there's a risk that you're going to be locked into it. Now, there's one window to get out of it between year 2 and 3. But I just got an email this morning from someone in 06 who just got their first retirement paycheck, and that's when they realized, like, holy cow, I'm paying $600 for the Survivor Benefit Plan. And now they want out of it, but it's like, well, you got to wait until year 2 now to be able to do that, or after year 2, the 24th month. So it's really important to understand how those costs works and how limited the flexibility is, because the cost is the same for everyone. And when it comes to insuring somebody's life, it shouldn't be the same for everyone. Everybody's different, right? Everybody has different health ratings and stuff. So it's interesting if you're coming out of the military and you're pretty healthy, why are you paying the same prices as everybody else? And specifically, if you're female, why are you paying the same prices as males? Because insurance on females is a lot cheaper. So we'll look at that numbers as well. But ultimately, what this is, Survivor Benefit Plan is not life insurance. It's an annuity. It's just part of the program. Your pension value that you get is based on a calculation of your time and service and your rank, and the SBP is just a function of that. It's just 55%. That's it. It's just another stream of income. It just gets cut by half, a little more than half. Something happens to you. Again, that is technically the positive outcome. At the end of the day, even if you do trigger that event, there is no option for legacy whatsoever. And so we look at the full value of the pension, and you recognize that you and your family spent those 20 plus years in service to earn that pension value. Do we not want to control all of it or have the choices on if you want to be able to pass that along? Because it's the type of benefit, the fact that you're collecting a pension in your late 30s, early 40s, even early 50s for the rest of your life is unlike anything else available out there. So that's why it's important to take a look at what these numbers mean for you. So let me just check in. Okay, so I'm going to share my screen now. If you do have any questions, feel free to drop them in the chat. Even if you're watching this at a later date, because this is recorded and stuff, we're not expecting everybody to watch it live. Go ahead and drop your questions in the chat, because we're going to do more of these videos in the coming weeks for all the various ranks and services. So if you have a request, put that in the chat or the comments below. So we will do that one next, and we'll ping you as well. And of course, you can always reach out to us at any time. But first, what I'll do is share some of the things that we're working on and kind of what this is all about. Here we go. Oh, wrong screen share. Hold on.
I think you brought up the.
Hey, we're learning the technical stuff as we go. Here we go. I was like, why did that look weird? There we are. Okay, so we've got our new white paper coming out, or really our Navigating Military Retirement Pay and Benefits Guide that's available on our website right now. It looks like this. It's at usvetwealth.com/retirement pay. So we'll be sure to put those links below. But basically, you can come here, you can get access, you can download the guide directly, not requiring your email or anything. It also gives you access to our portal where we'll post all these videos, but more importantly, we'll hold weekly question and answer calls and a Zoom call, private calls, so you can come in and ask more specific questions. And of course, if you want to learn more about what we do as part of our military pension protection system, which we'll talk about at the end here as well, that's the services we offer to help you provide these different solutions. But encourage you to go download this guide. It's 37 pages. It's a lot of stuff. I've had a lot of people say, wow, hey, this is a lot to download and take in and understand. And yeah, you're right. It is. The pension and the value of your benefits, there's different aspects of it you might be surprised to learn about. But either way, you're going to learn something. It'll take you an hour or two to get through. Digest it, read it a couple times because this is an extremely valuable part of your post-military life. Yes, getting a job and another high-paying paycheck is going to be valuable as well, but that job's not going to last for 30-plus years. This will. So that's what we'll get into next is figuring out, okay, where do these numbers come from and what are we talking about? So in this version of the white paper, we have different editions again. We run a scenario where we talk about, let me scroll down. Here we go. 42-year-old 05 retiring with 20 years of service. So the title of this presentation as well. So you can read about all the details in here, but what we're looking at specifically is what is the value of his pension, and how much would he have to pay for survivor benefit plan, and what would be the benefit if that paid out in any way? What's the probability of that happening? So we talk about all these numbers in here, and I'm just going to show you in this video where we get the numbers and why they're important. Okay, where we go. So it should only take a few minutes, and once we're done with this, then we can do quick Q&A at the end. But again, just leave your questions in the comments or anything specific you'd like us to address at a later date. So you've probably seen the military high 3 calculator. You've probably been here many times and ran the numbers to get to see what your pension value is going to be, right? How much you're going to get every month. So that's the most exciting thing about serving, to be able to earn the pension. And so what I've put in here is the data. Well, here, I'll just go back and show the options here. So we put in someone who's, actually, they're going to be 42. So let's just put in our data. This is the same data we have in the white paper. Someone who entered service in 2003, and they're retiring right in 2023, so that's 20 years, okay? Now, here's something to point out. This part of the calculator, everybody wants to enter their TSP data in here. I'd say zero that out. That's not relevant to focusing on what is the value of your pension. This is a distraction. TSP has technically nothing to do with your military pension. This is just whether or not you saved money in TSP or not. You could have saved money somewhere else. It's not why isn't that on this calculator, right? This is just to say, hey, look at all the benefits we've offered you for serving in the military. And it's like, well, you served the 20 years and you saved in TSP or you didn't save in TSP. These aren't necessarily them you any figures. This is just a calculator. Since it only shows one extra calculation, it's not really helpful. So that's why we're just focusing on the pension portion of this. So you can see here the age 42 retirement date, 20 years, 05. And then we got the high 3 total right there. And, well, let me zoom in. And so a couple important numbers on here. The one that gets looked at the most, of course, is what the annual pension amount is or what that's going to be monthly. We want to know what's coming in our monthly paycheck, figure out the cash flow, the budget, of course. But what we're going to focus more on is, especially when we're talking about the survivor benefit plan conversation, is what's the present value? And it's right here. We don't have to go to extra calculators. The government puts it right on our website, but they've got these two big numbers down here, and hey, who doesn't like to see big numbers? But we often aren't thinking about the bigger picture because we know, based on years and years of getting leave and earnings statements, our paycheck only comes every month. But what's really happening is when you're retiring out of the military, you're being gifted a benefit worth the equivalent of $1.8 million in this case. Okay, that's the value of, we call it, let's just say that the taxpayers are gifting you a winery. The winery's worth $1.8 million. Now, you can only access it with one barrel of wine at a time, coming every month. In this case, it's a little under $5,000 a month. But you actually you've earned something worth a lot more than that. So think about the fact that you're only getting a barrel, but you've actually earned and own the equivalent of a full winery or whatever metaphor you want to use, right? So that's important to understand because that's what the 20-year service is really about. But what's the next important numbers after this? Well, okay. When we punch this into the survivor benefit plan calculators, and where do you even find those to begin with, how does that data add up? Because it's easy to say, okay, what's a 6.5% of our annual payment? We can extrapolate that pretty easily, but to look at that over 30 years is also important. So there's another website that most folks don't know about. It's the Department of Defense Office of the Actuary. And the Office of the Actuary has their own spreadsheets and calculators that are just straight up Excel spreadsheets. So this is what these next spreadsheets I'm going to show you are about. And there's a couple different ones. You can play around with them, or you can work with us and we'll play around with them for you. But a similar thing, we're just entering in the data. And what they've done here is every year, this is the 2022 data. They update it every year. And they're the Office of the Actuary. So they get all the data, all the census data, and they pump it in here, and all you have to do is enter your data in, what your age is, what your birth date is, what your spouse's birth date is. So we'll assume that they're roughly the same age, maybe 1 year younger. And then this next tab here, this is where we enter in what's the value of the pension. So 4,819 is the annual pension number here divided by 12, of course, for monthly. And so that's where that number comes in. Of course, you can change your, and this is ironic. It's like, why is it different between officer and enlisted, disabled or non-disabled? Because the life expectancy is different based on all that data. So they've got the data. They give you the options to change it. And then there's other things you can put in here for inflation and interest rate and taxes. And again, I zero out the taxes simply because we don't know what your tax rate's going to be, and it can confuse kind of like the TSP. It's not relevant to actually what's happening. You can add it in later after you get the relevant data and see what changed. But one of the interesting things here on this spreadsheet is the subsidy tab here. And so now we got a bunch more numbers, and we're wondering, all right, what does this mean, the subsidy? Well, the subsidy is technically SBP costs more than 6.5%. So this is making it sound like based on your rank and all that, the government's actually subsidizing an extra percentage of your SBP. And that sounds like a benefit, but from my perspective, that means that's taxpayer money that otherwise isn't and also not ending up in the veteran's hands. So either way, it's a higher cost thing that's being paid for. It's just not necessarily always coming out of your pocket, but it's definitely not going into your pocket as well when it's being subsidized. So I think we understand that. But then the most useful tab on this particular spreadsheet is the accumulated cost to SBP and present value of SBP slide. And so, again, this is all straightforward stuff because the numbers are all fixed. The 6.5% of the pension, almost $4K a year. Okay, if something happens, 55% of the pension, a little over 30K for the 05 at 20 years. So what's the present value of the SBP? Around $1 million. Okay, so that gives you a perspective to know, okay, so if my pension's worth 1.8 million or more, then the SBP is only worth 55% of that, so around $1 million. So if we are thinking about doing a replacement, okay, well, there's our window of how much insurance do I need? Do I want to cover just the SBP or the full value of the pension or more? The SBP, you only get one option. It's 55% or only. Now, the other problem is what happens if I don't die? If I don't die, you are committed. If you don't die, you're committed to paying for the survivor benefit plan for 30 years. And that's what this cumulative cost is right here. It adds up to $165,000 over 30 years. If your spouse passes away first, there is no benefit. You do not get any money back. Okay, so this is where it gets interesting when you start to add up. Like, what could you have done with $165,000 over 30 years? Whether you invest it in a completely different investment, hey, just save for retirement. A lot of folks do that because they want to do the term and invest term insurance and then invest the rest. And since term is technically cheaper, 30 years from now, all have saved a lot of money and therefore not need the insurance. And what's kind of ironic about that, they call that self-insurance, meaning I've saved the money to self-insure. And so why has it never come up that we're doing self-insurance by using insurance on oneself? Because that's really what is the most efficient way to do this. There's a reason that just hoping that your accounts will work out many years from now can backfire, because if you opt out of the SBP, you can't get back into it. So you really want to make sure you have a solid plan in place as an alternative. So let's look at that real quick, just to kind of know what the standard alternatives are. Because usually we're talking about a type of term insurance and a type of whole life insurance. And the benefit of term insurance, and the reason why most people do that as opposed to survivor benefit plan, is because the cost is super cheap. And the reason it's super cheap is because it's a very, very low probability, much lower than SBP, that you'll actually get a return on investment, because folks typically, nothing happens in the term. You don't get hit by a bus. It's less than about a 2% probability or chance that a policy would pay out. And just like SBP, there's also no equity. So you wouldn't get any money back, and you're sitting there 20, 30 years later at the end of the term with the same problem. Now you got to apply for insurance again or pay higher prices because the coverage does end. And so the permanent insurance or the whole of life insurance was often an alternative to that of course required a lot more cost up front, much like a mortgage. You're paying a lot of the interest up front, takes 10, 15 years to even get some equity, but you never really get a good positive return on investment. Maybe you can get some money back. However, you can never buy nearly enough death benefit. You might be able to replace the survivor benefit plan value if you're throwing enough money at it, but you can't go much more than that because the whole life insurance just costs too much. You're just buying too much house to do it, right? But again, like a house, you can eventually get some equity, get some money back, and it's permanent. You can live in it, and as long as you fund it properly, it'll stay in force. But those are the two major problems. Term doesn't solve the problem because chances are you're not going to die, so it's also sunken cost. That adds up as well. It still can be a few tens of thousands of dollars. And then, of course, with whole life, it's not flexible and expensive, and you just can't really get enough of the insurance. So let's go back to the probability of, before I introduce our system, one more calculation about what's the probability of these scenarios even occurring. So we've entered in all the same data for the 05, the ages about 42 years old. And what this calculates, this is also from the Department of the Actuary, what this calculates is what is the probability of the survivor benefit plan payout occurring over either a 1 month period, a 5-year period, 10, 20 period as well. Meaning that's how much longer the spouse is likely to live after the veteran passing away, and therefore how many months of SBP payments they'd collect. So why is that important? Well, again, if we're going to be committed to this for 30 years, and the cost is $165,000 for an 05 with 20 years on average, then how long would the spouse have to survive in order to make that money back? It averages something like 3.5 years. Now, funny, they don't show this that calculation, so we'll round up to about 5 years. Let's assume that as long as the spouse lives about 5 years, you're going to make your money back and then some is really the scenario here. So that's the probability. When we go back to that first slide, cost of benefit versus probability of return on investment. What is the probability that we're just getting our money back? Not even talking about the full present value of the SBP, and certainly not the full present value of the pension, and then maybe even adding the VA disability on top of that, because that's definitely not included in any of these conversations. So, drum roll, less than 50%. For 42-year-olds that are roughly around the same age, for 40-year-olds that are roughly around the same age, less than 50% chance that we get roughly our money back or a little more. And those aren't good odds. And even just getting 1 month is only 67% probability. Nowhere is it 100%, right? And so if there's a better way, to use the same amount of money that would have otherwise gone into SBP, could be more, could be less, but with a way to protect up to the full value of your pension, assuming you qualify and have good health and finances and everything, because this is not meant for everybody. But that's our goal at US Vet Wealth with our new program called the Military Pay and Pension Protection System. And essentially, this is a life insurance strategy. We're brokers in the sense that we can go out and work with all the different companies and new products. And guess what? There's been innovation in technology in the insurance industry just like any other. And most folks just haven't heard about it yet or don't know how to do the design. Or oftentimes they're more meant for really high income or business owners in unique situations. And we discovered a few years ago that actually these modern types of strategies work very well for solving this particular problem around the survivor benefit plan. So that is the primary stuff I wanted to run through really today. This was a bit of a test, obviously, us to get on LinkedIn Live, to get on YouTube Live, start putting together these scenarios, putting it out there, showing you some numbers so you can crunch and see them. But really, obviously, you're going to get a lot more of the detail inside the guide and inside the portal where we'll have more videos breaking this down. But I just wanted to show you straight up front, hey, where do we get these calculations? And how you can calculate them yourself, and of course, how to access us if you have any questions. But that is okay. We're right at the 30-minute mark, so I think I hit my goal there. Looks like we have a comment. Let me no, the Dan says the no, it's not user friendly, but I think that's the problem is we often can overthink this. Like we're going to calculators, it's all official and stuff. And yeah, we want to get the accurate number, but at the end of the day, the number's gonna be whatever it's gonna be. And we're just trying to figure out, okay, what's the baseline, what's the ballpark? Because even the present value calculation. So let's go back to the the calculator. So notice this. When we change, obviously if we go to today's value, it just takes the inflation rate out. So is the total retirement benefit 2.5 million or is the future value of 4.2 million? Well, this is assuming you live till age 85. So this number would be less if you passed away earlier. But just trying to show, how much money would you actually collect if you lived to 85 on this pension with standard COLA, cost of living adjustment. You're going to pull in $4 million if you live 40 more years. Basically the second half of your life. Like that's a significant asset. So we change these numbers a little bit. Even if you stayed in longer, these numbers can only get so much bigger. They're already quite significant. So right now, the 1.8 million, we can change the life expectancy, and that present value number would come down a little bit, right? So we're talking ballpark. Usually for a lieutenant colonel, usually around 1.5 to $2 million, sometimes 2.5 is how folks like to value the pension. It's your pension. It's really up to you how much you want to protect. Of course, again, the SBP is worth 55% of that. Thank you, Andrew. Appreciate this. I appreciate you guys sticking with as we're pulling all these numbers. Because normally I like to talk around the emotions of this. The numbers of it is you can get stuck in the weeds of the numbers. And that's why I would just want to throw it all out there and say, listen, these are the numbers you need to focus on to make a decision that I've noticed in 10 years in this. Because you can shop around all different costs and prices. Ultimately, the main question is, can you qualify for anything else? Are you in a health situation, a financial situation where it even makes sense to bother worrying about this? Because there's a reason why. The caveat I always get when I make posts about this is, well, Scott, remember, it's good for some people in some scenarios when they don't qualify. It's like, well, yeah, exactly. Exactly. That's what VGLI and SBP is for the people who can't qualify. The goal should be to learn about this with enough time so you can avoid it altogether, because you're not going to get the benefit of paying the same costs as all the people who can't qualify for the cheaper stuff. That's the problem with group insurance policies. And unfortunately, we enter the military and we sign up at a young age. We never even heard about life insurance. And they say, here's service members group life insurance, sign here. And they don't tell you it's optional. It's 100% optional. It's a group. Why is an 18-year-old private paying the same price for group insurance as a 50-year-old crusty colonel? It doesn't make any sense. And of course, they don't find out about that until you're getting out of the military and you start to realize, oh, I got to replace my SGLI. And if I had something where I can't qualify for something outside, then the only option is VGLI, right? So glad it's there if you can't qualify for anything else. We just think it's unfortunate that folks don't give themselves the opportunity to qualify before something comes up so they can lock that in instead of waiting and assuming that the benefits that are offered are free, for one, or that they are the only way to, because really, when you're getting out of the military, they always talk about military to civilian transition. It's like, no, we're not becoming civilians, you're becoming a citizen. Let everybody else be civilians. Like the veterans, folks that come to me are, hey, I want to do something meaningful after life. I want to get paid what my worth is. That takes more stewardship and responsibility. That's what I hear folks saying. That's what they want to do. That's why money's important to them. It's not about how much they've built, how big their nest egg is. As important is it meaningful for me? Did it feel good earning that paycheck as it did in the military? So I think all these things tie together. Let me see if there's any other questions. Where's the guide on the website? It is I will post that link right here, and we'll put it all in the comments. And I don't even think I've promoted. We're a little bit of in a beta test kind of phase. It's not like I was expecting thousands of people to show up, so everybody's a beta tester if you're even hearing about this. So thank you for participating in our various little experiments. Boom. Boom. So that's how you can find it. And then there on the white paper, or on the guide is a little QR code where you can share it with folks, and they'll get access to this page where everybody can just click on it and go straight to the various or whichever rank they want. And of course, I got more. We can do more ranks and more times of service. I hope this is enough to give you a pretty close scenario of where you might be at. But let me know if you have something unique. Obviously, different scenarios. Medical discharges. We're seeing that a lot. Those folks, unfortunately, find out about a much shortened timeline. This decision, the assumption is anything. Actually, if you get any VA disability rating, the assumption is that I wouldn't qualify for something. I'm broke. It's like, no, that's not true at all. Even if you have things like sleep apnea, that does not mean you're disqualified. Even things like PTSD and TBI, nothing's a hard no right now, unless you've got major cancers or heart issues that were recent. So the insurance industry, people are living longer. Insurances have gotten cheaper. So it's kind of, insurances have gotten cheaper in recent years, yet the cost of government insurance has always stayed the same for decades. Okay, that should tell you something. But, all right. Cool. Any other questions? Let me bring in Gary and see if you had any other thoughts you thought we should add.
Hey, what's up, man? The only thing I was thinking about was what we had talked about a little bit before in the question. I think Dan brought up a good comment of like, well, what's that decision point after 20 years? You look at that high 3 calculator, and it's not very intuitive. Now, I know there's a lot that goes into the decision matrix after 20 years, and it's not necessarily pay, but realize as a retiring 05, if you're not looking to promote, after year 22, you're not getting anything other than a cost of living pay increase. So just something to add to the matrix. And, I think a lot of people I talk to as someone personally going through that transition process, I'm about 2.5 years out from retirement myself. We talk about that point and make that decision at about the 10 to 12 year point and say, yes, I'm going to stay until 20 years. That is the goal. Predominantly getting to that 05 rank is the goal. But after that, it's then what, right? And I think you really got to start talking about this process and the whole transition process early to really make an educated decision, even when it comes to compensation, because I think that is always the piece that, people are left scratching their head is, beyond the pension, what am I worth and what I want to do that's going to make me happy.
Yeah. And, but I think the first step of giving yourself the permission to value the pension, to remember that's what the 20 years is worth versus getting out and going straight for the job and the paycheck. Got to do that stuff too.
That's right.
But I don't know how much time do you think gets spent in the military transition retirement process on obviously the job side of it, but anything extra typically goes for the VA disability process.
That's
like
right.
How much time can you even spend on deciding? I mean, you go to one PowerPoint brief and 50 slides about here's the survivor benefit plan, here's your options, and it's just simply regurgitating the rules.
That's right.
Okay, but you're not in the military anymore. You don't have to necessarily follow these rules. They're options. They're not rules necessarily. They're the procedures. But there's different procedures, and of course, the biggest part of this. Well, does my spouse understand? Because ultimately, it is up to the spouse if you're going to decline it. Sometimes folks have already not been able to decline it, or already have it, and it's years later, and they realize, well, that's not even enough anyways. Because once you become a high income earner, when you're getting a pension, second job, VA disability, SBP is not going to be nearly enough to cover it all. And actually, I think Trevor's going to do another version of this presentation as we're doing the various ranks, where he looks specifically, he does what's called an asset map. And an asset map is just kind of a one-page way of showing all the different benefits and things you have going on, income streams specific to career military retirees. That you just not on a financial planning website or calculations. It's something we've developed specifically for this stuff. So
that's
we'll have those in future episodes. But cool. Well, I don't think we got any more. Yes, this is all. Oh yeah. So Tony, yes, this is all on YouTube as well. We've got a YouTube channel, Vet Wealth TV. I will leave you guys with a little bit of, I forgot to play this at the beginning, but a little something announcing that. So YouTube's the best way to follow up with this. But as you're reading through the guide, you'll see an invitation to our portal. Our portal is an online platform where we share all the information. There's similar features like a LinkedIn, ways to leave comments, do live videos. It's just private and internal is all. You can chat with me and that kind of stuff. It just makes it a lot easier than trying to schedule Zoom calls and all that kind of stuff. So come in there, hang out, get the info you need. Hang out as long as you need. It's not somewhere where you're supposed to live and create a whole new social media platform. At least not yet. We'll see what happens. Yes. So these will always be recorded, and we'll post the videos on the website as well. But I've got new versions. I've got a lot of SBP videos on the YouTube channel already. I'm probably going to take a lot of that down as I'm loading up a bunch of new ones that we've created. So they're going to be updated as well. And so if you see them, do us a favor, subscribe to the YouTube channel, even just play the video in the background, because the way that YouTube works, you got to get watch hours in. So you can have all your kids watching. No, I'm just kidding. That's the idea here is, so one of the things I like to teach is, okay, well, how does all this social media stuff work? Because there's ways to use it just for your individual profile to get in front of the people you want to be seen, versus hoping that your resume gets found in a stack of other resumes. So it doesn't always have to be for a business. It's not just about LinkedIn. It's the idea of using the online platforms to essentially make your job of finding a new career path easier. Let the technology do the work for you. I mean, it's kind of happening anyways. So if you know how to pull the bells and whistles a little bit, LinkedIn is a great sandbox to kind of get started and practice your skill sets. But I think a lot of folks get on LinkedIn and sit and wait. And the opportunity is to get out there and build an actual networking strategy. So that's the kind of stuff we're actually going to do in additional inside the portal. We're not just going to talk about survivor benefit plan all the time, because wealth in income is about so much more than that. And so that's more about what we do at US Vet Wealth. But I think that's all I got. If we don't have any other questions, Gary, you got anything else?
No, man, it was a great show. Excited to hear Trevor's version, and we'll continue doing this. It's cool.
Cool. All right, everybody. Thanks again. We'll see you next time.